Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Wednesday, December 28th, 2022. Thanks for checking us out. Please click like if you would. If you're watching the daily Apple report or the daily Tesla report, subscribe to the Wicked Stocks YouTube channel. It'll provide you notification each and every time new content has been uploaded, which is every day with regard to the daily Apple and daily Tesla report. Starting next week, the daily NVIDIA report. And if you would, share the content with friends and colleagues. We appreciate it a great deal. So let me start with the big picture and work my way in. So this has been the big picture now since early October, when we came very close to testing some variation of this longer term descending 1/3 speed line. And we did test it quite a bit as we moved through November, December, below 144.16, anticipating 123.17 by the end of January. We haven't even hit January yet. We may test this by the end of December. By the end of this week, in other words, if we close today below 129.04, I'm still calling 129.04 the June low a session containment, able to contain daily selling pressures. But I'm not expecting a significant bounce from here. We might muster a rally back into the mid 130s again over the next few days. I'll get to that in a moment. But if we break or open today below 129.04, 127.54 is likely. And if we close below 129.04, 123.17 in reach within just 3 to 5 days, possibly by Friday's close, depending on volatility. 123.17 is, preceded by a respectable channel bottom at 125.62, which I can show right here. Same chart, but now we're showing this descending channel bottom that is a couple of months in the making. So it really is this zone, 123.17 to 125.62, that can absorb selling through Q1. And it's been an objective now for the last couple of months. And while I'm at it, 123.17 is also backed up by, on the weekly chart, a rising 2/3 speed line projected off that significant March 2020 COVID low. So this zone narrowing weekly, we'll just call it the low to mid 120s. Significant support for Apple, able to contain selling through Q1, quite possibly into later 23. And from there, we can turn higher into later next year. But we're not even there yet. We do need to close below 129.04, in my opinion, for that to be clearly indicated over the short term, which is to say the following 3 to 5 days. Until then, we just might rally back into the mid 130s, which is shown properly here. We have two formations here. One is the former channel bottom at 135.63 that we settled below a couple of weeks ago, setting off, as you recall, a secondary sell signal. We also have a new channel top based on the last week of activity at 135.64, less than a 1 point zone. If tested over the next few days, able to contain buying into next week, and we could fall off from there again over the following week or two back into the mid 120s. Hi, if you enjoy watching our daily Apple report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. Now, on an intraday basis, I've got 132.38, which is beyond yesterday's high of 131.41. 132.38 could almost be considered a daily containment, able to contain daily buying pressures. But having come off that June low yesterday, this market may be inclined for recovery. There's no clear indication for follow-through buying unless we push or open today above 132.38. And then we could perhaps reach 135.64 on an intraday basis. That would be a significant volatile rally. I don't think it's likely. I think what is likelier, and you could actually mark this, if we close today above 132.38, then I think as we move it Thursday, Friday, by Friday's close, we should then push into this 135.64 to 136.53 area where we can top out into later next week, possibly through next week. This area could, truth be told, be upgraded to a 3-star weekly resistance area, able to contain buying through next week, and below which we should test the 125.62 formation over the next week or two. And then if we were to close above 136.53 in the coming days, and I don't see that in the coming days, I don't see that by Friday's close, let's put it that way. But if we did close above 136.53, then we actually have a meaningful buy signal over the following full week, 2 at the very most. I think more like 3 to 5 days to 144.16. So these areas are all well suited for you 1 to 2 week swing traders, selling the mid 130s, buying back in the low to mid 120s. If you're a longer term investor, you're buying it outright in the low to mid 120s. Swing traders, the 1 to 2 week swing trader covers their short position and goes long above 136.53, anticipating 144.16. 144.16, once again, this long-term speed line, able to contain buying through January, and once again, as we have many times before, fall off again on a multi-week basis back to 123.17. Now, closing above 144.16 would be a meaningful buy signal into later January on its own account, but in terms of longer-term bullish continuation, I don't see that playing out until or unless we can get above 152.96. And if that were to occur, say between now and the end of January, it doesn't look likely at this point. But if so, then we have a long-term buy signal of over the following 2 to 3 months back to that 182.94 high area from earlier in the year, or was it late last? I can't remember. Anyway, I think that pretty much covers it. Please click like if you would each and every time you watch the Daily Apple Report, and subscribe to the Wicked Stocks YouTube channel. I'll be back tomorrow with Thursday's Daily Apple Report, and you have a great evening.